Hey traders, Raghee here. Welcome to Charts and Coffee. Happy Wednesday, everybody. Great to see you all. All right, we are going to dive into, the economic calendar quickly here for Wednesday, November 10. We already have the CPI. So we have some inflation data that's been coming out this week. And, why do we care? These 8:30 economic hot zones right in here. Why do we care? Because this is one of the four, arguably five pillars of the Federal Reserve in terms of growth and inflation, monetary policy, money supply. All of those just sort of move down the line of here's the data we have, and this is how we can justify our message, and this is how our message is ultimately going to map towards our actions. So it all starts with the data. And that's why these are pretty important. Now, remember, there's sort of this echo effect where whatever that reaction was at 8:30, we might see that secondary reaction at 9:30 as we start the Wall Street day. Now, if our reaction was this, don't be surprised to see a little bit of weakness, perhaps as that secondary reaction, because remember, currency traders, futures traders, they can respond to the 8:30 a.m. Eastern number. Remember, there's options and on stocks and ETFs, and the underlying stocks and ETFs, they won't have that chance until 9:30. So that's what I mean about that echo forward. All right, so let's kick it off with some questions. Let's get to it. Again, happy Wednesday, everybody. Good morning. Hey there, Line Watcher. All right, first question for the morning is, why are bond traders buying bonds like the 10-year in the face of rising inflation? What's going on? So the why questions, I try not to get too, into the muck of that too much, but let's just tackle the buying. If I look at where we are in the context of where we've been, so this is where we've been, right? This is where we are. I don't know that it's a lot of buying. We're just not seeing as much selling, right? So I don't know that I would just sort of categorize that as buying. Of course, that's subjective, right? I think we found a range. So I think there's definitely, to your point, some question as to why did they perhaps stop selling, right? Why are rates, why do the rates stop moving? In this case with ZN, remember that the direction of the futures contract is inverse to the direction of the yield, the interest rate, right? So as the ZN drops, that's yields, and those are yields going higher. So I think it's really a yield question, really, when you get down to it. But I wouldn't call this a lot of buying. I just don't believe it's as much selling as before. And as far as why, remember, there's never one reason. It's not just inflation. It's not just Federal Reserve action. It's not just the equity markets. It's which one needs to be discounted, which one do traders en masse feel is not represented fully. And so that's all I'm looking at. I'm trying to stick with, and I agree with you, it's a little bit perplexing, but here's what I know. What do I see? And ultimately, we have to trade what we see. Trading what we think, I know from the past, it's always caused me trouble. So that's what's going on to me. Line Watcher, it's no longer a downtrend. It's clearly not an uptrend. And so this is where I look at, why did they stop selling bonds? What does that mean to the yields? And why would yields be flattening out or moving higher? I think yields are flattening out is what I think we're seeing. All right, next up, Tim asks, thanks for the Natty Gas video yesterday. My pleasure. I talked By the way, for those of you that might have missed it, I talked about the fact that there might be one more sort of one more trade left in Natty, and it won't trigger based on what I'm looking for until we get down into the level that we're in right now. So thank you, Darvis. And thank you, Darvis. So you can see these signals with a precursor to ultimately that pattern, that formation, the box, the Darvis box, which I've turned into a channel because when you put the vertical lines on the Darvis, they tend to cover up the wicks of the candles, which, let's face it, it bugs. So if there is, and that's if, right? If there is one more opportunity, it's going to be through the oversold fade buy at the bottom of the range. And that is justified because we're still in chop. We're not in a downtrend. We're still in chop. And within the context of chop, the bias, the directional bias, is still going to be influenced by the trend that preceded the chop. And that's where we are right now. That's the way I'm going to look at it. And so we can still look for a bullish setup. Okay. So that being said, that's the Darvis zone. And then, yeah, just like the video said, I'm looking for if there is a bounce to the point of control. So yeah, that's a great summary, Tim. That's pretty much what I'm looking at there. All right. Les says, thanks for doing this for us. Hey, Les, I don't know if I'm supposed to tell you all, but I'm going to tell you all anyways. I think next year, we're going to officially get to the point where these are available as a podcast for those of you that want to be able to catch this audio, and we're going to keep up with that. So this will be a podcast and the live show. And then I think we're going to expand this whole thing to start doing a little bit more by way of interviewing traders and more of a slightly longer format show for content regarding, what do other traders think and what are some of the ideas that are out there in trader land. And, I think that could lead to some really cool possibilities for guests and more topics. And of course, your questions. So yeah, I'm super stoked, Les. I love doing it. And I believe come 2022, we're going to expand it, which is great. I love doing this with y'all. All right. What are my thoughts on the CPI numbers this morning? My thoughts are, well, what happened at 8:30, and then that's what dictates what I think. We saw some weakness. So I'm not going to really take it any further than that. We saw some weakness. And then remember, inflation numbers, and I know where you're getting at, my friend, great thought, which is if inflation is running hotter, if inflation is running cooler, why did the equity markets sell off this morning? So let me refresh this page. Okay, so why did equity markets sell off with the 8:30 a.m. CPI number? Well, what does the CPI number tell you? That higher number tells you what? Inflation's running hotter than expected. Whenever inflation runs hotter than expected, it undermines the narrative that the Federal Reserve has frankly committed to, which is inflation is transitory. I don't care if it is or it isn't. What we're trying to do as traders is we're trying to understand what's discounted into the market, what's expected, what has the Federal Reserve led us to believe, and then we look at the data and say, oh, you're wrong. And if inflation's running hotter, the reason equities headed lower at 8:30 with that 0.6 and 0.9 print, look, is 0.3 or 0.2 the calamity? No, it's what the CPI reflects about the potential wrongness about the Federal Reserve and consequently the monetary policy or the message really that they're going to have to shift or tweak or emphasize. And so if inflation is not transitory, what does that say about potential monetary policy? There's no reason for the Federal Reserve to take their time with taper. And it might sort to truncate that space between, okay, asset purchases are zero, and then the logical extension of it is now we begin a tightening policy. Now we start to hike rates. Now we turn into hawks. Equities hate that. And so that's why we sell off a little bit. It's the reaction. That's really what it is. It's pretty much mapping to what do we believe the Federal Reserve's message is going to have to be if the data is different than what we expect and what they're saying it should be, right? And then unemployment claims being a little bit higher. Again, the sort of fifth pillar of the Federal Reserve's macro is jobs, employment. So that wasn't a good number for bulls. I don't think it's a catastrophic number, but it's not a good number for bulls. It's not a great number for traders thinking that data could continue to propel the market higher. So that's how that's how I interpret it. Hope that helps. Time to go shopping. Yeah, I agree, James. Yeah, whenever we see these pullbacks, we find those trending markets, and then we look to buy the dip. I mean, that's in a nutshell my career as a trader. So long before I was a meme, I guess, in terms of one of the many buy the dippers out there, buy the dip, trend following. It wasn't a joke. It just worked. And that's what we all did. So it's kind of interesting. Insurance, KIE. How you doing, AJ? So love the structure. Great eye. So what do we have here? I think the only concern I would have, and KIE was actually on my list of the random sticky notes that I keep on my desk. And one of the things that was on my list is taking a look at the liquidity on KIE and taking a look at the stocks that are heavily weighted within this ETF for any relative performance, etc. So love this one. It's on the radar. Now, it may not end up being a KIE trade. It may end up being a heavily weighted stock within the KIE. And again, this is the insurance ETF. This is not one of those ETFs that's talked about a lot. It's not a super liquid one, but it's almost a million share per day ETF. So I think there's some relevance to the stocks that are heavily weighted within it. So we're talking about a non-high concentration weighted ETF, meaning we don't have just a handful of names that are dominant in their influence over how this ETF moves. So it's going to be a little tricky to get to the stock level with a lot of confidence in terms of a stock that could be a proxy for it. So we might have to go straight up KIE. We'll just have to check the liquidity at the strikes and the expiry that we're looking for. So yeah, great eye. Good question. Good market for sure. All right, next up, Tesla. Sure. So yesterday, and I wasn't really kidding about this in terms of there's certain events that we want to fade. And if those events are triggered by, in this case, a tweet, right? Or something that is occurring in the context of an overall uptrend. My only thing was, hey, the size of this candle from a relative performance standpoint, from a historical volatility standpoint, was big. And so we want to see that pause candle today. And today might give us sort of an aggro opportunity to engage a market to the long side, or we might wait for Thursday for the confirmation of that pattern and then engage the market to the long side. But it is all about the buy. And this is that pullback, which, in many ways was triggered by this whole Twitter poll that Elon Musk started. And Twitter and Elon, it's never dull. I'm looking for a buy though, Jim, 100%. NEE. This is the number one weighted stock within the XLU. XLU is not in really a great uptrend because, let's face it, are we looking at defensives? Are we looking at places to hide out when we see overall risk appetite? And the answer of that is no. So NEE is going to, in many ways, be held back by the tide, and the individual boat, as big as it is within the context of the XLU, this particular boat's going to have to really work harder to sort of separate itself from the narrative of the XLU. Now, XLU has a lot of other names within it. And so it might not hurt us to say, look, is NEE the best of those? And I agree with you, it is. But just remember that XLU is going to be a little bit of a drag, quite literally, on NEE. But the structure is trying to get bullish, and I'm with you there, 100%. How long do I think AMD's current run will last? Nobody knows. Carter, I can appreciate the question. I'm going to tell you what anyone you ask should say when you ask them how long something is going to last. For as long as the buyers are willing to pay higher highs, for as long as, if you want to take it the next sector down, as long as the sector continues to promote individual relative outperforming stocks, and for as long as we have support, I would say maybe at the VWAPs, but ultimately nobody knows. Nobody knows. So that's a big I don't know for you, my friend. Next up is ICLN. Okay, so another really nice, so this is another, so I love sort of the out of the box symbols and ETFs today. So ICLN, another ETF, again, crack it open, high concentration weighted or not. What are the heavily weighted stocks within it? And then buy the dip. I mean, I like this for a buy the dip. But then, of course, if we take a look at ICLN, we also want to remember that there could be heavily weighted stocks within it. This, in and of itself, this is a very, very liquid ETF. I believe 4 or 5 million shares traded per day. So not a super high concentration weighted ETF, but SolarEdge, Plug, Enphase, Consolidated Edison, Sunrun, First Solar. There's a lot of interesting names here in that top 10 list. So take a look at those as well. But I like this for a dip buy. Absolutely. Double green grab candles, 21 EMA. Darvis sitting at that 21 EMA. What's not to like on a pullback? So really, really good symbol to watch. All right. Next up is Tesla. Yeah. So Jim, same answer as before. Let's wait for a pause candle. Yeah, let's wait for a pause candle for sure. Euro. So if I look at the euro, the best way to do it, frankly, would be the euro versus US. That the Forex will always be the primary marketplace for currencies, 100%, right? I think the euro's destiny is going to be in the hands of either the ECB or the FOMC. When you think about correlations in the market, negative or inverse correlations, none is stronger or more consistent than the relationship between the euro and the US dollar, which is inverse which is to say the dollar's heading higher, euro's heading lower. And the dollar has been chopping around a little bit, but I really don't want to be short the dollar, which means I really can't be long euro. Although, for the first time in a while, obviously both of them are sideways, which means the fade is valid, but I will prefer to fade this market at the top of its range for a short than for a buy. But frankly, if there is a time to start thinking about a buy, you're probably looking at the area just in front of the 115 handle to position yourself and say, look, if we can hold this area around the 115 handle, the 115 major psychological level, then yeah, there's a chance that I can put in a low risk buy for possible movement higher. But remember, whenever you play the euro long, you should have a thesis, technical or otherwise. In this case, it is a currency, so the central bank thesis would be important. What are the pillars of the central bank, etc.? What are they doing about the data? So there's no way to extract central bank influence on a currency. Having said that, anytime I'm looking at the euro, if I have a long thesis on the euro, I must have a short thesis on the dollar. So it's got to be a twofold trade. And there aren't any other currencies that I will say that about. But anytime you're playing the euro, you are playing euro US, and it's a very, very strong inverse negative correlation. And so if you have a long thesis on euro, you should have an equally strong thesis on why you want to short the dollar. And if you have it, absolutely go for it. Go for it, right? Okay, so just like that, I am out of time. As always, thanks for being here for Charts and Coffee. Thanks for all the questions. I'm sorry I missed some, but just really quickly, I'm bullish XLY 100%. CSX, take a look, Deborah, at the broader market. Ford, I've been pretty bullish on Ford as well. And oil stocks, TH, very bullish on oil stocks. Austin, I want nothing to do with coin. Not my thing. I'd rather just play Bitcoin and not sort of these ancillary setups, unless they are tracking really well with that touchstone. In the case of Mara and Riot and Coin, it's going right back to BTC. All right, I'll see you all tomorrow, same time, same station. As always, be good to each other. I'll talk with you soon.